the beginning of the year has brought a wave of economic pessimism, with analysts predicting limited room for the Bank of England to lower interest rates. This comes despite mounting evidence of businesses slashing jobs and a general economic slowdown, all while inflation shows signs of resurgence. Financial markets anticipate a 0.25 percentage point reduction in borrowing costs to 4.5% at the bank's next policy meeting on February 6th. This cautious approach reflects the delicate balancing act the bank faces, combating persistent inflationary pressures while simultaneously mitigating the detrimental effects of a potential economic downturn. The confluence of rising energy prices, escalating costs of essential goods, and persistently high borrowing costs has created a perfect storm for UK households. This challenging economic environment is acutely felt by millions of individuals grappling. StepChange, a leading debt charity, has revealed that a staggering 21 million people are actively preparing for a significant negative impact on their personal finances. This alarming statistic underscores the widespread anxieties and financial vulnerabilities prevalent across the nation. The CBI, a prominent business organization, has further added to the somber outlook, reporting that businesses are actively planning both job cuts and price increases. These measures, while potentially necessary for some companies to maintain profitability in the face of economic headwinds, will undoubtedly exacerbate the existing financial pressures on consumers. The convergence of these factors, stagnating economic activity, stubbornly high inflation, rising unemployment, and increased borrowing costs, paints a concerning picture for the UK economy. The government faces the daunting task of navigating this complex landscape, balancing the need to control inflation with the imperative to protect vulnerable households from further economic hardship. The challenge is compounded by the inherent uncertainties surrounding the global economic outlook and the potential for further unforeseen shocks. The anticipated interest rate cuts, while potentially offering some relief, are unlikely to be a panacea for the deep-seated economic anxieties currently gripping the nation. The coming months will be crucial in determining the effectiveness of the government's response and the resilience of the British economy in the face of these formidable challenges. The situation calls for proactive and comprehensive measures to mitigate the impact on individuals and families struggling to make ends meet, coupled with policies aimed at stimulating sustainable and inclusive economic growth. The scale of the problem, as evidenced by the millions bracing for financial hardship, demands a robust and multifaceted response.